Should you buy or sell your house in summer 2021? We're going to answer that question right now. Let's take a look at an example. Person one had literally the worst timing in real estate history. They bought their house in the first quarter of 2007, right before the market crashed in 2008. And then person one sold their house at the very bottom of the market in the first quarter of 2009. Now, person two, who said, you know what, I'm not going to buy anything because I think another crash is coming. Who got burned more, person one or person two? Now look, there is no way to predict the market, but if you are waiting for a crash to buy or sell real estate, you have a better chance of getting screwed by prices continuing to go up rather than buying a house today and the market crash tomorrow. If we go back and look at the graph, the national median sales price took 6 years to recover from the worst crash in housing market history. So this is an oversimplification, but hold on to your house for 6 years and you will be fine. Now, if by some stroke of the worst luck in history, bought a house today, the market crashed tomorrow, and for some reason you had a life event that forced you to move before that 6-year mark, then yeah, you might be out a little bit of money. And again, going back to the previous example, if you bought at the top of the market and sold at the bottom of the market, you would still be better off than the person who said, you know what, I'm gonna wait for a market crash, and missed out on all of that growth that was coming in the next few years. So now let's talk about if the market is actually gonna crash. Now, according to the Wall Street Journal, the market will not crash as long as you hit the like button in the next 5 seconds. Thanks. Okay, but in all seriousness, let's talk about how likely a crash is to happen. And for the purposes of this video, so that it's not 25 minutes long, we're gonna focus on one topic, and that is supply and demand. All right, my degree is in economics, so let's have a little fun. So this is the supply and demand curve. Now this graph works for all markets. It works from everything from the supply and demand of oranges to Teslas. The quantity of the product is down here at the bottom on your x-axis, and the price of the product is on the y-axis. Now right here, where the supply and demand curve intersect, is called the equilibrium. This is when the market is most happy. So let's pretend that this graph is the housing market. What happened to the supply of homes on the market when COVID hit? That's right, supply went down because everyone was freaked out that there was a pandemic. Nobody wanted to move anymore. If you had your house on the market, you probably took it off the market because you were worried that you weren't going to get as much for your house. So overall, we saw a decrease in supply. That means that the supply curve is going to shift to the left. And remember, where the supply curve intersects the demand curve is the equilibrium. So now we have a new equilibrium. Your price has gone up because quantity has gone down. Does that make sense? But I would argue that demand has also increased because now you can live anywhere you want. Now that companies are allowing you to work from home, you don't have to be in the city anymore. You can start moving out to the suburbs. So there are a lot more people that are mobile right now looking for homes. So not only did the supply curve shift to the left, now the demand curve has shifted to the right. So where's the new equilibrium? Yep, all the way up here or wherever we're at now. So when it comes to supply and demand, I think we are working towards a new equilibrium. And until we hit that new equilibrium, prices are going to continue to rise. And I don't think we're there yet. So I think over the next probably 18 months, we're still going to see a continued steady growth of prices. Okay, well, what if we were to build more houses? So wouldn't that shift the supply curve back to where it originally was, and maybe we would see a slight decrease in prices? Well, yes, but building materials have become so expensive, it doesn't make sense for builders to build in certain places anymore. I was talking to a builder this week. They had plans to build a new community in Milliken, Colorado. And Milliken tends to have a little bit more affordable housing. But because of the increase in building materials, it no longer made sense for the builder to build in Milliken, Colorado, because they would have to sell the house at over $500,000. And that's way too high of a price point for that area. So the market is trying to fix the supply issue, but we can't. So because of that, this isn't a bubble. This isn't 2008. This is 2021. It's the market's response to COVID. And I think it's pushing us towards a new level of pricing in the housing market. So if you're thinking about buying or selling your home, do it. Real estate has been a great investment for the last 60 years. And even with all of the volatility and everything that's going on right now, I still think it will continue to be a great investment. So that's it. Thanks for watching. If you haven't already, hit the subscribe button. I've got some big goals this year, and it'd be a huge help if you subscribe. So have a great day, and I will see you next time.